In this video, we look at two major institutions' recently updated metals price forecasts. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The prices of most of the major metals have risen substantially this year on a combination of persistent inflation and supply constraints, with the exception of iron ore, which has been hit by a downturn in China. These moves have driven some changes in the price estimates for both Australia's Office of the Chief Economist, or AOCE, and the World Bank, which have recently released their updated forecasts, with the AOCE's figures extending out to 2029 and the WB to 2025. Both institutions have made significant upgrades to their gold targets for 2024, with the World Bank at $2,100 per ounce near the average year to date, but the AOCE much lower at $2,023 per ounce. The World Bank expects a decline next year, but AOCE a slight pickup before a slide through to 2027. Overall, this seems to imply a decline in economic and geopolitical risk over the next few years, which we expect may turn out to be overly bullish. We also note that both sources have tended to severely underestimate the gold price over the past several years. The two sources have diverging copper price assumptions for 2024, with the AOCE forecasting a dip to $3.78 per pound and WB a rise to $4.04 per pound, but the price for both converges to $40 per pound in 2025. Consistent with the gold price assumption, the AOCE's gradual rise in copper price estimate implies a consistent economic improvement, as the metal tends to be a major indicator of global growth. The 2024 aluminum forecasts for both institutions are in line, with a rise to $2,300 per ton, but there is a split in 2025, with AOCE ahead, and as for copper, they expect a gradual improvement out to 2027, which implies steady economic growth, while the World Bank expects less of a rise for 2025. Both sources are much more bearish on the iron ore price and expect a long-term decline, which in turn implies falling demand from China, which is the majority of global demand for the metal, mainly for use in steel, and would likely indicate a slowdown in the construction industry in the country. The AOCE and World Bank assume a big slide in the nickel price for 2024, which has been driven by a rise in supply from Indonesia, which is the world's largest producer at nearly 50% of the global total. However, this decline is forecast by the two institutions to be a short-term trend, with a rebound expected for both by 2025, and the AOCE estimate rising out to 2029. The zinc forecast follows a similar trend to aluminum, but the dip for both sources in 2024 is much less severe. A recovery is forecast from 2025, and again the AOCE forecast makes a steady climb through to 2029. For the major metals overall, we believe that the AOCE and World Bank may be underestimating the economic and geopolitical risks that could hold down the base metals and drive up the gold price in 2024 and 25, and potentially beyond, with the current outlook not appearing to price in the possibility of a significant slowdown in growth or ramp up in geopolitical risk. For more information on the metals and mining stocks, click the link in the description or bio below to go to www.canadianminingreport.com.